What's up, guys? Welcome back to the channel. Like I said, we are streaming again every single day. Biggest crypto stories, news, movers, charts, trades, all that good stuff. But I want to focus on one thing specifically today. Bitcoin dumped almost $1,000 in a few minutes this morning. And my first thought was, how often does a move like this happen? And more importantly, what happens after a move like this? If you look at all the times we've dumped 10% in a day, does it usually bounce back? Do we usually trend lower? Is it a buying opportunity? Should I be panicked? All those things. Stick around. I'm going to dive into the data with you. Enjoy the video.
I have a wonderful electronic invention I want you to see. It looks something like this.
All right, so check this out. I downloaded the data for the past 3 years, 2017 through 2020. I use CoinMarketCap. If anyone's curious about which exchange I used or what prices I used, I use CoinMarketCap, which aggregates, I think, a couple of the top exchanges. Right? I think that's a little bit less important. Once I had the data, I wanted to find what kind of sell-offs have we had in the past 3 years that look like this. So I filtered it by whenever we sell off by 10%, I got those results. And I got results for about 59 days. Now, in the past 3 years, there's been about 1,000 days. So 50 days out of the last 1,000 days, you get about 5%. So 5% of the days, or 1 in 20, we actually do have a day like this, where Bitcoin is negative and we sell off by 10%. Small sample size, but I think it's actually a good sample size. We can at least look at what happened after. That's the next step. So within those 59 days, the next step was, what happens after? What does the return look like? Do we bounce back? Do we start to trend lower? All these different things. What's the size of that bounce? What's the size of the next sell-off? This is where it gets a little bit trickier. So after a sell-off like this, on a down day where the sell-off's at least 10%, there were 34 days that we bounced back. We had a positive return the next day, meaning if you bought that sell-off, you would actually make money just in the next 24 hours. That's not a lot to work with. 25 of the days were negative after. So about 57 or 60% of the time, a little bit better than a coin flip, we do bounce back after. You can attribute, I think, some of that to mean reversion, meaning when we have a big sell-off, maybe the market just kind of tries to find the mean or tries to bounce back a little bit. You can attribute it maybe to there hasn't been that many days. Still, I think it's a good idea that we're not always going to bounce back. We're not always going to continue to sell off. That first data point and looking at that at least tells you you don't have to panic, and this is not a guaranteed moneymaker if you buy the dip. But I think the odds are with you. Let's dive a little bit deeper. Okay, so I wanted to take it one step further. Of those 34 days that we were positive, meaning if you still think we're in an uptrend, historically, when there is a positive return after a sell-off like this, what's the average return of that bounce? How high will Bitcoin bounce if this is the dip to buy? And on average, of those 34 days, the average return the next day was 4.8%. That sounds like a small number, but in 24 hours, that's actually a significant bounce. So if you do still think the uptrend is on, and the bull run has not ended, all those different things, that's a pretty significant bounce. I thought that was quite positive. If you aggregate it all and you look at the positive and the negative days, it gets closer to the mean return of Bitcoin. So once again, if you think the bounce is on, that's a pretty nice data point to back it up. Now, one other thing that you're probably wondering we should think about is what caused this sell-off, right? That's a major variable on whether or not I think this uptrend continues. Did the sell-off happen from one whale? Did the sell-off happen from liquidations? Did the sell-off happen because the narrative changed? I don't think the narrative has changed at all. I don't think you can really pinpoint it to one whale. I'm sure there's going to be some people in the comments and the conspiracy theories will swirl. People are going to say it was one whale, it was one group of people. Who knows? I can't tell. You can't tell. You can only speculate. The third thing I guess you can think of is, was it caused by liquidations? Now, you might be wondering, how are liquidations causing the market to move this much? Why is that something we should actually consider? Bitcoin's unique in this regard, and Sam Bankman-Fried, who I've had on my podcast, is the CEO of FTX Exchange. He has a really great video on this. I'm going to pull from his example. Liquidations in crypto affect the market much differently than they do any other asset class. Liquidations can happen across every asset class, right? They can happen in equities, they can happen in stocks. So let's walk through an example, and it's the one that he used in his video. If you're trading a stock, let's call it Apple, you have $100 in your account, you open a 10x leveraged long on Apple, it moves down 10%. You have a $1,000 position, $100, 10x leverage, you have a $1,000 position on Apple. It moves down 10%, that's a 10% loss in your $1,000 position, $100 loss, so your margin's gone, you get liquidated. Okay, if that happened to a ton of people trading Apple, someone would step in and buy Apple if it was only caused by liquidations. Why would they do that? Well, Apple's worth the exact same thing. So if it was only liquidations that caused the move, they should buy it back to the fair value, right? Whether that's based on earnings, whether that's based on their book value, whatever it might be, there's an agreed upon way to value that stock or value that other asset. With Bitcoin and crypto, this is where things get a little bit fuzzy. There is no agreed upon way to value Bitcoin. In fact, that's what makes it so amazing to trade. That's also what makes it so confusing to try to price. So let's say there are cascading liquidations that cause Bitcoin to have a massive move. If you look at the chart, and if you look at the data put out by Skew, I'm going to link it right down below, I'm going to flash it on the screen, there were a ton of liquidations. So let's walk through how this would work for Bitcoin. Let's say Bitcoin starts rising really fast. A ton of people add leverage, right? It's going up, you tack on 100x leverage, you can do it on BitMax, Bybit, wherever it might be. You've probably been through it. If you haven't, the guy next to you has. People add leverage when the move is going up, right? You get greedy. Now, if the price starts moving down and you get liquidated, it causes further selling pressure. Why does that happen? Let's say you're long, you're over leveraged with 100x leverage or 20x leverage, whatever it might be. Price drops to your liquidation level and you're forced to close. Not only are you forced to close, but that close is processed as a sell on the book, right? Someone has to sell your long position. So it creates further selling pressure on the price of Bitcoin. So as you get liquidated, more and more sales add, even if new entrants aren't selling, right? It creates further selling pressure, this cascading liquidation effect, right? And if we look at the data, Skew.com has it. They have excellent data on BitMax and really every derivative exchange. 100 million plus in buy liquidations last night or this morning, right? That's pretty sizable. That's one of the larger liquidation feeds I've seen for the entire run up for Bitcoin. So with that many liquidations happening, I think Binance as well, Hoska Trades, if you don't follow him, you should. He saw that about a third of the total open interest for Binance was liquidated, right? Open interest just meaning what's the notional value of all the positions open. So you can think about if I have a leverage trade, if you have a leverage trade, if your friends have a leverage trade on Binance, that all adds into the open interest. A third of that was decimated, and there was a ton of new open interest added as Bitcoin rose. With all these liquidations happening, BitMax moving down much further than other exchanges, right? Cascading liquidations probably played a large role in the sell-off. Now, the next question, does that mean it has to bounce back? And this is going to be the first question in the video that I don't have a concrete answer for. There is no yes or no. I can't read the future. No one can, right? The market will be the true decider. So let's go back to what I think is the most important variable in all this, in the sea of data. What is the cause of this sell-off? And if we can eliminate some of the causes, maybe it helps us use that data earlier just a little bit better. Remember, if there's a bounce back day and we understand what the cause of the sell-off is, maybe we can decide, look, the sell-off isn't justified. We should have a bounce back day, right? You can start to tilt the odds, I think, a little bit in your favor. So there's three variables that I can think of. What would cause a sell-off? Whales. Well, I don't know. I don't have any insight on whether or not it was a whale, one person, 10 people, thousands of people. So I'm going to cross that one off. I'm not sure. The second thing, was it liquidations? Well, we can see that there were cascading liquidations. So let's hang on to that one. The last one being, did the narrative change? No, I don't think the narrative changed at all. Central banks are still printing tons of money. Risk assets are still doing quite well, even if you think the economy is bad, stocks are bouncing back. And that fares well for Bitcoin. It's a scarce asset. It's a risk-on asset. Narrative and macro have not changed at all. There was no breaking news. There was no change in central bank policy. So narrative has not changed. That's great, right? So the most important thing, is this a liquidation-caused sell-off? Can you call bullshit on it? That's one of the things that when I actually talked to Sam, he's the one who put out that video, had that excellent example about, why stock liquidations are different than Bitcoin liquidations. He said that in his video. He said, look, if Bitcoin goes up X%, you can't really call bullshit. It's the same if it drops. You really can't call bullshit on that either. So it's up for you to decide. Do you think this sell-off was mostly caused by liquidations? And we won't have a full kind of answer for that, right? We won't ever fully know whether it was cascading liquidations or a lot of people stepped in to sell. As I look at the charts, I still don't think the market structure has changed. And what I mean by that, we're still above the monthly open price where Bitcoin started this month. If you even go back to last month, if you go back to May, Bitcoin did something similar, right? It dropped down to the monthly open and around 6,300 and then bounced. We're still forming higher lows. The narrative macro is still intact. Maybe it was whales, maybe it was liquidations. Those are two things that are up in the air. But I think you can start to tilt the odds in your favor and say, narrative hasn't changed, the trend is still intact, liquidations probably caused a little bit of how violent this move was. Using the data, if we do bounce back, it actually looks quite positive, right? So hopefully the data helps. Hopefully that at least gives you a framework that you can think about this. And if you have a little bit more knowledge than me, well, now you're really getting somewhere. Hope you guys enjoyed the video. That's my thoughts on Bitcoin. I'm going to leave that for you to think about. If you're trading this, definitely a fun time to be in the market, right? Before I wrap up this video, yesterday I said in the first video back, I need a new name for the show. And I'm going to give away $100 in Bitcoin to someone that helps me name it. Now, that $100 was up for grabs today, except I didn't see any names I liked. So we're doing this again, and I'm not washing the deal. There's now $200 in Bitcoin up for grabs. All you have to do, share this video on Twitter, tag me, and tell me what I should name this daily show. If I pick you, I'll DM you, I'll give you that $200 in Bitcoin, and I'll do it right here live on the video. So you can verify it, you can see it. I need a name for the show. What do you guys think I should call this? I used to call it Coin Chat. I used to call it, all these different things. I have the Coiners podcast. I want a name that works. It's crypto-based. It's a daily show. Help me out. You get $200 in Bitcoin. Nice way for you to get involved. Tag me on Twitter. Share the video on Twitter. Give me a name for the show. Hopefully you guys enjoyed it. Hit that subscribe button, thumbs up, all those good things help me out. That's all I got. I'll see you guys tomorrow.